All right, so what is going on, guys? It is your boy CZFX back at it with another video. And this video is going to be a gold breakdown trade that I'm currently in. I'm currently locked in and loaded at about, I'm going to be showing the screen right now, $570-ish floating, $580 floating. It's fluctuating a little bit, but I'm going to break this trade down, show you guys, and basically show you how you can do it as well. So we're going to be looking at the DXY first, right? Because the DXY is the strength and weakness of the dollar. So if we look at the dollar, right, on the 4-hour time frame, we add the 50 and 20 SMA, we see that price has been creating higher highs and higher lows this entire time. This entire time, structure just been creating higher highs and higher lows, respecting support and resistance zones, break and retest of zones, break, retest, break, retest, break, retest. And in this, you do see minor time frame structure pullbacks where you see these retracements where price maybe, doing big bullish pushes and moves during gold or GBP USD. You may see them do big pushes, but for the most part, you want to be taking sells, right? When it comes to trading, let's say the pound, right? GBP USD, this was a trade I marked up today as well, which I called a 1 to 4. So if I show you the trade, I closed out at about right here. And again, the reason why is because the dollar was super strong. As you can see, you have uptrend, uptrend, uptrend. Structure is broken. As structure is broken, it touches inside this supply zone and pretty much gives you a sell signal. Stop loss right above here, appropriate stop loss. And I just wrote the sucker down for a 1 to 4 risk reward. But when it comes down to gold, same thing, right? Again, gold doesn't really necessarily trade that well as it does GBP USD when it comes to the pound. A lot of times you'll see gold do its own thing. For the most part, you will see gold give you nice, good confirmations and confluence when it comes to the dollar. If you see the dollar being weak, you should look at gold being strong, and vice versa. The dollar is being strong, so you can see potential sell signals when it comes to gold. And that's pretty much what I did. I looked at gold when it came to the 4-hour time frame, right? And I looked at, okay, what is gold doing? What is gold trying to do, right? So I marked up my zone. I seen that gold failed to create and close above this structure zone right here, right? So you have price creating higher highs and higher lows. Price pushed above this zone, failed to close above, right? Immediately pushed right back into the actual zone, which gave me clear confirmation that gold was being weak. It didn't have enough strength to close above, right? Which pretty much formed this head and shoulders pattern. And pretty much all I did was just wait for price to kind of retrace right back into the zone and, give me about a 50 to 61.8 entry. And I pretty much dropped down into the 5-minute time frame, looked for a divergence, looked for a break of structure, and pretty much took that to catch a fib. And as you can see here, you have divergence. And then on top of that, you had a break of structure, which gave you a fib entry. I marked it up on the smaller time frames, 5 and 3-minute time frame. Actually, no, this was a 1-minute time frame trade. I marked this up in the 1-minute time frame. Structure was respecting the 50 and 20 SMA. My entry is right here after this 1-minute candle close. Stop loss right above here at my 88% rejection. And I pretty much just wrote this down. I could have exited out this trade for 1 or 2, but I see price going lower. And yeah, so this trade is currently up around 500. And yeah, guys, just pretty much just trying to ride this sucker down. Where I see price going to is this structure zone right here, which is the next form of support. That's if price can actually close below this zone. If it doesn't, then we may see prices slow down and kind of trail around this area. Around this area right here where this 20 SMA is, but hopefully price can break below this zone, retest, and kind of give me more of a sell signal where price can push down a little bit lower. And yeah, guys, so this type of trade is super simple, something that a lot of people can do. It's just literally just, candle confirmations, divergence, break and retest of structure. It's nothing too major. And yeah, so, you could have potentially, snagged at the market 1 to 2.3 at the market right here. Like I said, I could have, I was risking roughly $287 of this trade. At most I was up, it was almost around 700, I believe. No, around 630 bucks. But as of right now, it's currently floating around $500 of profit. And yeah, I'm just pretty much just gonna ride this down, see how far can go. This new 1 hour candle just opened around 17 minutes ago. So pretty much right now, I just pretty much see prices kind of, pulling back and doing that 50% and just riding it down. So as of right now, I'm just expecting price to just give me just, following structure, right? So break and retest the structure, just breaks and retest the structure, break and retest the structure, and then eventually a huge meltdown to the support level, which would be another, I believe, 100 pips. It'd be like a 100 pip drop from here. So hopefully that can happen for a nice, good 1 to 8 risk to reward. I believe that would be. Let me see. That would be a 1 to 5 risk reward right here, and a 1 to 8 will be down to this level right here as well, which is a very big move, 232 pips. But we'll see if price can do that. For the most part, I'm just really expecting price to come and retest this level again, and that's around a 1 to 5 risk reward. And I risk roughly 0.5% on this account when it comes to funded accounts. So basically how I do it is, when it comes to the challenge phase 1 and 2, I risk 1%. And then when it comes to the actual live account, I risk 0.5%. That way, no matter what, I should be okay. And then, if I want to risk more, then just get more capital. You know what I'm saying? So let's say you buy the 100K account and the max you can risk is 500, right? If you want to be risking, let's say $2,000 to $3,000, then get 400 to 600K funded. It's that simple. That way you keep risk management, but on top of that, you can actually increase your actual your risk in a sense by maintaining the same risk percentages and parameters, so you have good risk management. That way, if you lose 2 or 3 trades risking 2%, you don't just wipe out all your wins. But in this case, you can risk 2,000 to 3,000 and still maintaining 0.5% risk. So yeah, guys, this is pretty much just a breakdown. It's a quick breakdown on this trade. Just break and retest of structure. Price is currently up about $500-600 in profit, floating around 500 to 600. And yeah, guys, just a clean, simple break and retest of structure, right? You see price fail to create a new high, right? DXY being very, very bullish, creating higher highs and high lows this entire time. The DXY has been very, very bullish, right? The dollar. So what I'm pretty much doing is waiting for price to be in confluence with what the US dollar is doing on a higher time frame. So if the US dollar is being very strong, I'm waiting for price to give me sell signals on gold, right? And give me sell signals, divergence, breaks of structure. And then I'm pretty much entering on a retracement on a Fibonacci and just exiting either on a extension or a certain body of structure where I see price kind of going to. And that's pretty much it. Just rinse and repeat. Same thing when it came to GBP USD. And I believe I marked up the trade and I posted it. So let's see. This was the trade itself. Just a break and retest of structure, uptrend, higher high, higher high, higher high, higher high, higher high. Again, US dollar was extremely bullish. So what am I going to do when price breaks a form of structure and enters this little sell zone? I'm going to sell. Price melts it. So it's pretty much it's that simple. That's all I'm pretty much doing. Just using confirmations, using the dollar as a form of confluence when it comes to the strength and weakness of the dollar. And then, pinning that against, the pound, or pinning that against gold, and just repeating that over and over and over again. 1 to 2 trades per day, sticking to your session and taking high probability setups. And yeah, that's about it. So hope you guys enjoyed this video. If you did, like, comment, subscribe, stay tuned for more content.